Good day, Junior Tikkies. I'm Mrs. Brimacombe. We're going to look now at Activity 5. You are provided with the information relating to Perfect Stores. Perfect Stores render services and sells goods. This means that they are buying from the suppliers and they are selling to, but they're also rendering services. Our main income from services rendered is fee income, and our main income from selling goods is sales. So this is a combined activity with a service business and a trading business, where one business does both of those things. Required: draw the cash journals of Perfect Stores on 30 June 2024. Number 2, record the opening balances and totals in the general ledger and post the cash journals to the general ledger. Balance and total the general ledger at the end of the month. And then the last question, prepare the trial balance. So this is everything that you basically need to be able to do in accounting. You need to be able to complete journals, posting it to the general ledger, completing the trial balance, and then of course the accounting equation. So first, what is important to understand here? They never provided you with the markup percentage. This means that we need to calculate it. And to calculate the markup percentage, we have to take our sales minus cost of sales divided by cost of sales times 100. So this is important step to calculate the markup percentage, because in this activity you would be required to calculate the selling price or to calculate the cost. So if you don't know the markup percentage, it will not be possible to calculate it. Then the transactions for June 2024. So when you start with the transactions, sort out what goes into the cash receipts and what cash goes into the cash payment journal. We are going to start now with the cash receipts journal. Transaction number 1. The owner, Kay LaRue, increased his capital contribution to 1 million. The money was paid directly into the business current account. Issued receipt. Although it says paid directly into the business current account, it's important to take note that it said issued receipt number 22. So we have to start with the source document, duplicate receipt number 22. We've received the money from Kay LaRue, but now it goes directly into my bank. And how did we get this amount? They said they increased their capital contribution to 1 million. So you need to look at the trial balance that was given to you on 31 May 2024. This is the capital balance at the moment. So 1 million minus the capital balance at the moment equals the amount which was contributed by the owner. Don't get caught out by writing 1 million. It specifically said increased his capital contribution to 1 million. So go and check what the capital balance is currently, and 1 million minus that equals the amount which was contributed. On the same day, issued a cash register roll for 1,552 for services rendered 450 and the balance for merchandise sold. This means our source document is cash register roll, but we're first going to indicate, because of services rendered 450, this is my main income, fee income for services rendered. This means that now the difference was because of sales 1,102. And now we can calculate the cost using the markup percentage to get the cost. In total, how much did we receive? 1,552. Those two figures must correspond. Day 10, cash sales as per cash register roll, 8,294. This happened on day 10. Source document cash register roll, Details, sales, analysis 8,294, sales 8,294, and the cost, calculate the selling price or use the selling price times 100 divided by 145. That was the only transaction on that day, so we draw a line, and that's the amount that will reflect in my bank. On day 14, the owner applied for additional loan from Purple Bank for $60,000 at 12% interest per annum. The increase in the loan was granted, and the money was paid directly into the business current account. So here they said the money was paid directly into the business bank account. Nowhere did they mention that a receipt was issued. That's why the source document is going to be bank statement. This happened on day 14. From who did we receive the money? Purple Bank. Directly into our bank account, $60,000. Why? Because of loan Purple. That's the details. Please, that 12% interest per annum is just telling you that this is the interest that you are going to pay on this loan. But the amount that you applied for that was paid into your bank account was $60,000. On day 16, received an EFT from Paul Stewart for $15,000. $12,500 was for rent income and the remainder for services rendered. Just because you see the word EFT doesn't mean it's in the CPJ. It specifically said there, keyword, received an EFT. So this goes into our cash receipts journal. My source document is bank statement. From who did we receive the money? Paul Stewart. How much? $15,000. $12,500 was because of rent income, and the difference, $2,500, is for services rendered, and that goes under fee income. So be careful with this transaction. Day 21, goods marked at $34,800 was sold for cash as per cash register roll. Source document, cash register roll on day 21. Details, this was because of sales. Analysis, $34,800. Why? Because of sales, $34,800, and the cost, take the selling price times 100 divided by 145. That was the only transaction on day 21, so we draw a line. How much the money did we deposit in our bank account? $34,800. Day 25, received $1,300 cash for services rendered as per cash register roll. So when we render services, my source document is cash register roll, but my details is services rendered. Analysis of receipts $1,300, and this goes under fee income $1,300. That's the only transaction on that day, so draw a line. How much was deposited into your bank account? $1,300. Day 28. So this is a more challenging transaction. It says cash sales as per cash register roll, $25,752. This was subject to a 4% discount. So the easy part in this transaction is identifying the source document, cash register roll, on day 28, sales, and they provided you with the selling price after discount, $25,752. The difficult part is calculating the cost. Please remember, to calculate the cost, we always have to calculate it on the original selling price before the discount. This means we first need to take the selling price after the discount times 100 divided by 96 to get what was the selling price before the discount. And then we can use the markup percentage to calculate the cost. So this is what makes it a bit more challenging. When trade discount is given to customers, it means that we sold it for less than what we intended to. We sold it at a discounted price. So what did the customer pay for it after the discount? But when we're calculating the cost, it's always calculated on the original selling price. Make sure that you remember that. On day 30, an extract from the bank statement received from Finland Bank showed K. LaRue, capital contribution 20,000. So this means that the owner contributed again capital in the amount of 20,000. Because it's reflecting on my bank statement, it goes directly on or under bank, and my source document is bank statement. Once we are done with all the transactions related to the cash receipts journal, we can total starting with bank. And please remember the following. Bank is debited and cost of sales. The rest is credited. So if I take sales plus fee income plus the total of sundry accounts, it should equal your bank. If it doesn't, it means somewhere you've made a calculation error mistake. Cash payment journal. Day 6. Made an online payment to Sabie wholesalers for the following purchases: merchandise, consumable stores, and packing material. So these are not 3 different types of transaction or 3 different payments to different suppliers or people. This is one payment made buying different items from Sabie wholesalers. So to approach this, I start with the source document bank statement on day 6 from who did we purchase, and now what did we purchase. Merchandise is always shown as trading stock. We purchase consumable stores and then packing material. In total, now we need to add all of that. We made a payment of 28,150. Day 7, withdrew cash from the current account at the ATM for the following. So my source document is ATM, it's actually ATM slip. On day 7, cash, and again I'm starting with why did we drew the money? We drew money because of wages, 3,000, drawings, 500, cash float, 1,000. This means in total, 4,500 was drawn from the ATM. On day 10, paid MTN cellular by EFT number 8 for the business cell phone contract of 800 and the owner's personal cell phone contract 350. Now you just need to make sure that you don't write it in that line. You need to leave that line open. In the following line, we're going to start with EFT number 8. This happened on day 10. Who did we pay? MTN cellular. For what? The business cell phone contract is 800, and the difference, or they specifically said, not the difference, they said to you, the owner's personal contract is 350. This must always be shown as drawings. Anything that the owner takes for personal use is shown as drawings. In total, we paid MTN cellular 1,150. Day 14. Drew cash at the ATM for the weekly wages, 3,500. Again, make sure it's not in the same line as the drawings. In the next line, source document, ATM, day 14, cash. Now, the wages is 3,500, 3,500. There's always a double entry principle that's being applied. 2 entries. On day 20, a direct transfer for 28,000 was made to Oma wholesalers. 85% of the total amount was for goods and the remainder consumables. This means that our source document is going to be bank statement because a direct transfer was made. On day 20, we paid 28,000 times 85% was for goods. Goods is always shown as trading stock. And then there's now two ways I can calculate the consumable stores. We can take 28,000 minus 23,800, or you can just take 28,000 times what is 100 minus 85% and just times it by that. It will give you exactly the same answer. Day 21, drew cash from the ATM to pay the weekly wages. So you can see that wages happens weekly. On a weekly basis, we are drawing cash so that we can pay the weekly wages. Day 25, made an EFT payment for 3,780 to City Council, 2,400 for water and electricity, and the remainder for rates and taxes. So we're going to approach this a little bit differently than what we've done before. And the reason for that is they told you we made an EFT payment to City Council for 3,780. Of this, 2,400 was for water and electricity, and the difference is for rates and taxes. Day 26. An online payment was made to purchase a new cash register from General Stores, 8,760, subject to a 10% discount. Please remember that discount means paid less on items purchased. So when we give as a business, when we give discount to customers, then we need to show how much is this customer going to pay us less the discount. This cost is always calculated on the original selling price. When discount is received because we've purchased, it means that we never ever show the discount amount. We need to show the amount after the discount. How much should we pay for it after the discount? So the source document is bank statement on day 26. We purchased from General Stores. And now we need to do a calculation. 8,760 times 90% means that the total amount that we need to pay after the discount is 7,884. There's two ways. You could have also said 8,760 times 10%, but then you still need to subtract it, and you will get exactly the same answer. So this is the challenging part in this is calculating, but how much did we pay after the discount? And the second part, what was challenging about this transaction was the fact that you need to know that a new cash register was purchased. That means it forms part of your equipment. Day 28. Withdrew cash from the ATM for the weekly wages, 3,500, and the owner's personal use, 600. So they didn't tell you how much in total. And this is why I start with, we drew cash for wages and for the owner's personal use. In total, we drew 4,100. On the same day, bought a second-hand delivery van from Menlyn Motors, 180,600, and paid via direct transfer. This means my source document is bank statement. A payment was made to Menlyn Motors, 180,600 for vehicles. Please don't go and write second-hand vehicles. This will form part of your vehicles. On day 30, purchase trading stock for 27,250 from Maxi Store by EFT. So the first part of this transaction is EFT, because they set by EFT. That's my source document, and now it must be in numeric order, so the next number is 10. From who? Maxine Stores. How much? 27,250 for trading stock. The second part of this transaction was the extract from the bank statement received from Finland Bank. A debit order in favor of Santam Insurance for insurance. So the first transaction that we need to show, the source document, bank statement. Who did we pay? Santam Insurance. How much should we pay? 1,890 for insurance. The second part, Purple Bank, monthly repayment of loan. When we receive money, when we've received the loan, it goes in the cash receipts journal. When a payment is made, we show it in our cash payment journal. From source document, bank statement, who did we pay? Purple Bank. How much? 1,300 for the loan. When you are done, you can draw a line. A reminder from the CPJ, bank is always going to be credited and the rest is going to be debited. If I take trading stock, wages, consumables plus sundry accounts, it should equal the bank if I add all of that. If it doesn't, it means you've made a mistake. The next part of the question is to complete the general ledger. So we start with the balance sheet account section. And the first account is capital. Capital is an owner's equity account, which means that the balance brought down is on the credit side. This is very important to study. Drawings is owner's equity, but plus on the debit, minus on the credit. Or you can study D for debit. Drawing starts with D, D for debit, balance brought down on the debit side. And take note, it's the same as it appears in the trial balance. It appears on the same side. Then we've got land and buildings. It's a non-current asset, balance brought down on the debit side. Posting from the journals now. When posting from the journals, when we're posting from a money column, it happens at the end of the month. When we're posting from sundry accounts, on the day the transaction took place. So the first that we're looking for is capital. So capital is under sundry accounts, which means that on the credit side, we're going to have on the same day that the transaction took place, which is on the 1st, we're going to post it to the general ledger. Please remember the basic principles. Bank and cost of sales is debited from the cash receipts journal. The rest is going to be credited. That's why capital is credited. And another thing, our equity will increase if the owner contributes more capital. Then also on the 30th, the owner decided to increase his capital. Take note, this must be in date order. So you cannot have the 30th and then day 1. This must be in date order. Now we need to look for drawings. In our CPJ, on day 7, drawings is going to be debited with 500. Remember the basic principle. From the CPJ, bank is credited, the rest is debited. Then on day 10, our drawings will be debited with 350. On day 28 with 600. And the reason why we're showing it individually, because we're posting from sundry accounts. You cannot go and take 500 plus 350 plus 600 and add it together and write it as one figure. Land and buildings, there were no land and buildings purchased. This means we're going to close these accounts. There's nothing on the debit side, so we just total the credit side. With drawings, there's nothing on the credit side, so we just draw a line so that we can total the drawings, and land and buildings remains exactly the same. Next, we're looking at Vehicles. Vehicles is regarded as an asset, so the balance brought down is on the debit side. Equipment, an asset, balance brought down on the debit side. Trading stock, an asset, so the balance brought down is on the debit side. Posting from our journals, starting with the cash receipts journal, we need to see, was there any vehicles? No, but going to the CPJ, on day 28, the business purchased an additional vehicle, 180,600. This will increase our assets. Equipment, again, check the CRJ as well as the CPJ. Equipment, in my CPJ, on day 26 from sundry accounts, we have to post it on the day of the transaction, 7,884. Next, trading stock. So trading stock, starting with the cash receipts journal. If you see cost of sales, you should know that trading stock is involved, because what does the term cost of sales mean? The cost of the goods that were sold. Goods refers to trading stock. So starting with, from the cash receipts journal, trading stock is going to decrease, our assets will decrease, and the contra account is cost of sales. From the CPJ, it means our assets will increase because we've purchased trading stock. This happens, both of them, on the last day of the month. When you're done posting from the journals, we can balance the account. Vehicles, there were nothing on the credit side, so just draw a line and total. The same as with equipment. But with trading stock, we need to balance this. And to balance this, we need to take the debit side and total it. It means the credit side must be equal to the debit side, and then the difference is my balance carried down, means balance brought down. Bank. Always check bank if it's on the debit or on the credit side. If it is on the credit side, it means that this is an unfavorable bank balance. Cash float is a current asset, so it appears the balance brought down on the debit side. Petty cash on the debit side, 1,000. Posting from the journals. From the cash receipts journal, bank will always be debited, and my details, total receipts. From the cash payment journal, bank will always be credited, and my details, total payments. Cash float, on the 7th, money was drawn, 1,000 to put into the cash float. Remember, posting from sundry accounts happens on the day of the transaction. There were no petty cash in either the cash receipts journal or the cash payment journal, so there's no changes to the petty cash. We can now balance bank. Please be careful. Just because I started with a credit balance doesn't mean that I'm going to end with a credit balance. It is clear that my total receipts exceeds my total payments, and considering the overdraft balance that we had in the beginning. This means we now went from a negative bank balance to having a positive bank balance on the debit side. So again, be careful with your bank. Cash float, there's nothing on the credit side, so we just draw a line and we total. Loan, Purple Bank. This is regarded as a liability, which means that the balance brought down is on the credit side. So ask yourself the question, when will this debt increase? This will happen when the business take on more debt, increase their loan. When will it decrease? When a payment is made. So when the business receives money, it means it will reflect in your cash receipts journal. When a payment is made, it will reflect in your cash payment journal. So always check both journals. Sales is an income, so the total brought down is on the credit side, and cost of sales, an expense, total brought forward on the debit side. Take note, balance sheet account section, balances. Nominal account section, total. Posting from the cash receipts journal. On day 14, the business increased their loan, 60,000. Then from the cash payment journal on the 30th, so what will happen with our debt? It will decrease. The business made a payment, 1,300. Again, I'm going to remind you, when we receive money from this loan, our debt increases. When we make a payment, our debt will decrease. Posting from the cash receipts journal, sales is going to be credited at the end of the month. Cost of sales is going to be debited. Please take note. Cost of sales, my contra account is trading stock. Trading stock was credited. Cost of sales is debited. At the end of the month, we need to balance this, starting with the loan. Take the credit side minus the debit side, and that is my new balance. This is the amount which we owe on the 1st of July 2024. Sales, we can just total, and the same as with cost of sales. Fee income is an income, total brought forward on the debit side. The same with rent income, on the credit side, not the debit side. Wages is an expense. On the debit side, we will have the total brought forward. And consumable stores on the debit side, an expense, total brought forward. So this is really easy if you understand where the balances and totals brought down should appear. Study DebtClick, which we've mentioned on a number of occasions, and then you can get this 100% correct. Posting from the journals, we're starting with the cash receipts journal, fee income. At the end of the month, our income is going to increase. The contra account is bank. Rent income, on day 16, the business received the rent, 12,500. Wages is from a money column, so at the end of the month, from the CPJ, bank is credited. Our expense wages is going to be debited. There's money column open for consumables, so the same applies for consumable stores. It's an expense. On the last day of the month, from the CPJ, my details is bank, 5,400. When we are done, at the end of the month, we can just total. If we look at the following, packing material, telephone, insurance, water, electricity, and rates and taxes, all of these are regarded as an expense. The plus is on the debit side, and it should be the same as it appears in the trial balance. This means that the total brought forward will appear on the debit side. Posting from the CRJ and the CPJ. Always check both, because we could have gotten a refund, a cash refund. So always check the cash receipts journal as well as the cash payment journal. So what happened? Packing material was purchased on the 6th, so our expense will increase. Telephone on the 10th. Every time that we've made a payment, our expense will increase. Insurance on the 30th. When we're posting from sundry accounts, it's on the day the transaction took place. and then water and electricity on the debit side on the 25th, 2,400, and then rates and taxes on the 25th, 1,380. Once we are done posting from the journals, we can draw a line and we can just total it. There's nothing on the credit side, so all you need to do is you need to total the debit side. When we are done posting to the general ledger from the journals, our next step is to complete the trial balance. So all your new balances and totals calculated in the general ledger will appear in your trial balance. Make sure that the order is kept exactly the same as it is in the general ledger. You cannot suddenly renumber these accounts. We started with capital, drawings, land and buildings. Then we've calculated vehicles, our new balance, equipment, account number B5, a trading stock, account number B6. So again, we have to use our end balances. Then we moved on to bank. We went from a credit balance to a debit balance, cash float on the debit side, and petty cash on the debit side, the same as it appears in your general ledger. Loan, my new balance is 198,700. Do not go and total the debit and the credit side. You first have to complete the nominal account section, and we started with sales, then cost of sales, our new totals, then fee income, rent income, wages, consumable stores. This is your new totals calculated. Packing material, account number N7, telephone, insurance, water and electricity, rates and taxes. So again, it's your new totals calculated at the end of the month. Once we've done taking everything from the general ledger, our next step is to see if this whole process was done correctly. By adding the debit side, which includes the balance sheet section and the nominal account section. If I've done this correctly and I take everything on the credit side, those two figures should be the same. If it's not the same, you've made a mistake, and then you need to go back, check the general ledger. Didn't you make a mistake in the general ledger, or posting from the general ledger to the trial balance? If you cannot find a mistake there, then you need to go back and have a look. What have you done from the journals to the general ledger? Maybe somewhere in that process you've made a mistake. Thank you very much. I want to leave you with this quote: impossible is just an opinion. Have a wonderful day.